Testing 1 2 3. Testing 1 2 3. Here we are right now at 5:29 a.m. The jobs number, the monthly, is coming out momentarily. What we're going to be focusing on in the number is that the shorts came out of the market yesterday, because they did. And that's what drove the Dow, the S&P, and all index higher. And basically, the bull community is actually on the bandwagon of that happening. So, MMTs, we will watch that public reaction momentarily. For 5:29 a.m. Pacific Standard Time, today's date is 3/4/2011. We had the big run up in the indexes because we did. And the numbers coming momentarily. And here is the weekly Dow that hit the tip of that 10-week moving average. Here comes that number. 192,000.
Payrolls increased by 192,000 jobs. 8.9% is the unemployment rate. Average hourly earnings unchanged. So in line with the consensus forecast, job gains across the board. Manufacturing up 33,000. Ditto construction plus 33,000. Professional and business services plus 47,000. Healthcare up 34,000. Private sector job growth 222,000. And the non-farm revisions for January and December, an additional 58,000 jobs than what had been previously imported. The only negatives: state and local governments lost 30,000 jobs last month, 8,000 losses in the retail sector. The manufacturing sector has gained 189,000 jobs in the last 12 months. The last time we had that much year-over-year growth, you got to go back to June of 97 and 98. This is the largest monthly increase since May of last year. 13.7 million unemployed persons, 6 million for 6 months or longer, 43.9%. Back to you guys.
All right, there's your stats. Now let me tell you something. Everything that we were saying earlier before the number, and why that we felt why the government was padding the number, meaning sandbagging the numbers to the public, so that at a certain specific period of time, when we were teaching all of our SMF apprenticeships students there, one of the things that we really keyed in on was the ECRI, and we were looking at that number along for years. But nonetheless, what we were looking at is that's where you would show an increase. And sure enough, you came out with numbers that now will give the bull and everyone else who wants to give their analysis an opinion. Right now, the NASDAQ futures are only 4.8 up. Crude oil's at 103.14, up $1.23. The gold index got a gap of 2.4 after the number. Credit spreads, the 2-year, 5-year, 10-year, and spreads are kind of flat. The Dow gap, that initial knee jerk from the number, which will in return now want to give the bulls something to feel good about, as they should. However, just remember at stockmarketfunding.com, there's always something behind the scenes, and we specialize in what is behind the closed doors and the truth that people are never told. Nonetheless, we do have a way of deciphering that and calculating that, and then actually, if you don't believe it, we'll even have it transcribed, put in an envelope, and then it'll come clear to you at a later date. You could open it up and read it. So the thing about it is yesterday's advancement is also going to create on the high side of the gap a shorting the fade back, if it does what it does as we said it would yesterday, if you continue to stay elevated in the brain in the delta cycle, that means that when the indexes break back up at that certain delta cycle that I talked about last night and yesterday on the S&P 500, is that it's going to take, if they really believe in everything that's being told to them, then you will be able to, the brain would confirm by the amount of time that you were throttling that price action. And when that pullback does come, it is a, 3 teenies down, but then bam, right off to the right side of the market, break out, sell it, bank it. On the top side, like I said, look for that upper end of that price exhaustion. That's that's when it gets exhausted. And it has to come down some. But beware that the diminishing pullback, if it's diminishing pullback and you're not coming out of that short-term short spread trade and getting net long on that bounce. That's exactly what was happening yesterday. NASDAQ futures gave up all their losses, only up 0.8 right now. The Ether that was put in the market yesterday, that meant that once we started hitting certain technical levels in the delta expansion in the SMF platform, that's when individual names would do exactly what I said, and that would be throttling up at the upper end of the price levels and whatnot, because that means it means that as the indexes get healthy again, and that the actual net of the, today will be 10-day cycle, last week's full trading week, and then this week. Now we're going to net out the actual net of where the index trends are. And it will not be deceptive. And as we know, if they get stronger and can hold the strength, this is the key. They have to hold the strength. Just remember, today is day 5, period, 5 trading days ending on a Friday. Basically, today's trading day, at the end of the day, we will at that time be able to take the top reversal down to the delta line support on all indexes, then the delta expansion, we're going to net it out and end up actually coming up with an exact perfect trend ratio, because if it's elevated, that means when names go up and they slide back, they're going to bounce off that support level like a rocket, and that's the part you want to get very intuitive about, or intuition about. As far as price action goes today, MMTs. So basically, you've got your futures. You also can tell that when I was telling people to short the high end, these gaps that were just up here have all faded back. One of the ones that we're going to show you in pre-market is, here's that bull, 89.13 by 20. I got 12 by 20 pennies, 13 by 22, 26 by 21. 89 on the flat line of the closing bell of 89.16. They already started hitting that upper end right after the number. The Dow futures only up 13. They just fell, slide that bid. S&P futures, heck, it's only positive 0.10. Now, let this be an example of what I was talking about before the number, about slide that bid up off that top, and the shorts came out yesterday that then ran them indexes up toward the high, and the damn news is baked in the cake. It's right here. It's going to be range bound. It's going to be taking a look at the net price movement. So the ones that had the biggest advances yesterday are the most susceptible to slide 3, 6, 9, 12 bids and then get price action support and move higher again. Let it be known on Jobs Friday, let it be known that the futures have rolled over significantly. Why is it? Because you got the shorts out yesterday. I told everyone yesterday, go to stock market funding, look at pre-market. However, it was a scenario. And right now, you can see the bull below that. So that gap was already sold short, called a bull gap short, up at the headline. Because that's what it was. And you got a nice gap right here on Apple. But remember, when it hits up on that high and you start to drop in the IR rapidly, man, don't wait around. Just get short. Just make sure it doesn't close above the previous high. The high price action print. We're okay. We do it this way. And not only that, we use our wonderful MMT platform because it will do the same thing as it did yesterday. It will do the same thing today. And that is monitor. You only had 1 day out of 10. Today is the last day of 10 trading days. That's half of 20 trading days. And so therefore, on Saturday training session, we're going to be able to really define the exact immune points of all indexes. And by understanding that, MMTs is going to let you know what the majority of your trades will be. We will be price action range. The thing of it is that immediate knife hook in your MMT platform, and you know what that is, be on the lookout. And everybody should be watching that the new MMTs to learn how to work as that team that you are, is that you got to cover individual ones. So somebody should be on the Netflix, the Amazon, the CMG, the price lines, the same drill, the same stocks that we make markets. Watch that Goldman. Watch various different key things that are happening. And we will do that this morning. And it's Friday. The thing about it is, key is in that last hour, do people want to go home net long over the weekend? I'd rather doubt it because there are more things that are brewing up. Let us not forget oil's at its highs. Here's your NASDAQ diminishing gap today. Compared to all the other days, you don't have much of a gap list. Yeah, it's positive, big deal, but not like the other days. Go back on the SMF website and look at your pre-market, okay, on listed stocks. Today, what do we got on the NYSE? You think we got a high one like yesterday? Well, we're going to find out. Guess what? We do have some that are good. Deere's $1.22. You would take a look at the XLU. That's the highest gap ratio MMTs. But remember, go and try to tie together identity with association. And the association aspect of what kind of news is driving behind it. All right? So basically, that's the pre-market and the job numbers. They're already selling short that gap. That means that that short seller that covered out yesterday is going to try to throw down on the top of these things today. And the key is, but you're going to be ready to buy off of that lower 3 teeny price action line or 5 teenies or whatever the case is. But when you do, you know that your MMT platform is going to grow that 3-minute barrel bar. And when it does, and it holds half of that, and then it has a follow-through bar as we've showed in many live trades, that's when you want to be on board. All aboard. Because that's when that market maker, that's what you are being trained, but the market makers on the floor, they know that at that particular price level for that whatever time frame, it could be 15 minutes, could be an hour, who knows? one thing you do know, that the price action breakout or the price action breakdown will be there. Good luck on Jobs Friday.